Anything above 74 cents on XRP, I've been a firm believer that we're going to come back and we're going to target those highs from back in July when we won the court case, from back in July when XRP pumped to the high 90-cent range when it was deemed a non-security. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're just going to be covering a weekly recap of what took place in the digital asset space last week, going over technical analysis, breaking down fundamentally why price action did what it did via the price fluctuations intraday. Then we're going to forward look into this week and what potential outcomes could potentially play out given the fundamental data that we are set to experience moving forward, looking at the core PCE price index year over year and month over month, and what effect either positively or negatively it could have on risk assets as a whole. So if you all enjoy this video breakdown, geez Louise, that was a mouthful, do us a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, breaking down the intricacies of the market for you guys so that way you all firmly understand them. If you all want access to our private CYPRX community where we give these fundamentals and these breakdowns and this technical analysis all in advance before we give it to the public, make sure that you visit CYPRXtrading.com. We have about 75 slots left for our monthly membership program. With all of that information in mind, let's jump into the charts and let's go over the market technically and fundamentally. Alrighty, so before we give the price projections as to what could potentially take place and some things to be paying attention to on Bitcoin as our primary focus, you could use this and you could do this technical analysis on other digital assets across the board. I'll also maybe potentially give you guys a forward-looking projection on XRP as well. But let's just go over to the total cryptocurrency market capitalization. I have a whole bunch of notes. It looks very confusing, but I want to break down for you guys in detail why these price fluctuations actually took place. So let's go back to the past 2 weeks, all the way from Monday, March 11th to Tuesday, March 11th, and what took place. Why did we start to see a risk-off market sentiment in the market as a whole pull back, i.e. XRP is an example, topping out at roughly around 74 cents during this week, pulling back to roughly about 58 cents. Bitcoin topping out at roughly around 73, 74,000, whatever it was at the current moment in time, pulling back all the way down to $62,000, $63,000. Now, why did all of that take place? Well, Tuesday, March 11th, we had higher inflationary readings where the CPI report that week came in a touch hotter than expected at 3.2% on the headline and 3.8% on the core. Analysts were looking for a 3.1% and 3.7%. So the data actually came out higher than market forecasts, showing an increase, elevated inflationary report. Following that day, we had higher PPI figures, where the PPI, which measured the average change in prices that producers and manufacturers pay to suppliers, rose 1.6% for the 12 months, ended in February, leaping from a 1% increase in January. Now, at the same time, we had higher PPI and CPI readings that week. We also had upbeat labor market data, where the unemployment claims data came out lower than previous readings. So the week ending in March 9th, the advanced figure for seasonally adjusted initial claims was 209,000, which was a decrease of 1,000 from previous readings, signaling that there's still some strength in the labor market. Now, all of that led to a risk-off market mood, where we started to see inflow back into the dollar and risk assets pulling back from their recent high. Ending that week, heading into last week's price action, what did we see the vast majority at the beginning of the week, Monday and Tuesday, i.e. the higher inflationary readings in the CPI and the PPI report, coupled with the upbeat labor market data? Market participants started to forecast that we were going to get a hawkish FOMC meeting. This is copied directly from a fundamental article where it says, Fed preview forecast from 15 major banks, risks of a hawkish shift in the dot plot. So we can see how that risk-off sentiment and that hawkish sentiment, i.e. the hawkish projections that the market was anticipating from the Federal Reserve, affected negatively the risk asset space, where that same day we saw strength in the dollar and another drop in risk assets. When the FOMC meeting actually came out, why did we see risk assets flip back bullish? Vast majority of assets across the board, like Bitcoin, making gains back from the initial loss that it experienced the day prior, where we saw Bitcoin from roughly around 63,000 recover to like 67,000. We saw XRP from about 58 cents recover to about 66 cents, give or take on the day. Now, why was this? This was due to the US dollar that was notably lower after what was seen as a dovish FOMC meeting on Wednesday. So remember, leading up to the FOMC meeting, market participants were expecting hawkish remarks from Jerome Powell because of the higher inflationary readings and upbeat data that we saw prior weeks. However, Jerome Powell came in and fed into the whole entire rate cut narrative by saying Federal Reserve 2024 median dot was left unchanged with 3 cuts for 2024. Still the Fed forecast, but the dovish part came at the pressure where Fed Jerome Powell downplayed the hot January and February CPI numbers. So this dovish tilt saw risk assets surge and the US dollar dumped. The US dollar dumped that day from about 104.100 down to the low 103s. That prompted a favorable risk on market environment. We saw risk assets recover across the board. Now, leading into the weekend, why did we see risk assets, albeit we did see some increased dollar strength on Thursday and Friday? Why did we not see risk assets across the board sell off drastically? So we did see a slight pullback after the dovish sentiment from Jerome Powell delivered on Wednesday via the FOMC release. Why the following day did we see a pullback slightly? It was due to the upbeat US data, where we had manufacturing activity and existing home sales come out higher than previous readings, giving some strength back to the dollar. But overall, all right, let's cover these reasons right here. So why risk assets are still holding on to gains? Think on a global scale. Okay, if you're watching this video breakdown and you've been paying attention to the education that we provide, what has been causing risk assets across the board since pretty much late October 2023 to flip bullish? It has been this whole rate cut narrative that central banks globally are going to start to cut interest rates, leading us into a lower interest rate environment that we know risk assets tend to appreciate in. So major central banks globally shifting monetary policy. This is why, albeit we saw some strength back in the dollar as we headed into the weekend, we did not see a major sell-off in risk assets. Okay, this is me explaining that to you guys. So yes, the US economy is still strong, but we had a dovish sentiment from Jerome Powell feeding into the rate cut narrative, which we know has been pumping risk assets for the past few months. So we know that albeit, yes, we saw an uptick in US data, we still had Jerome Powell solidify that eventually we are going to head into a lower interest rate environment via ushering in rate cuts. That boosts risk sentiment, right? Markets are starting to price in a lower interest rate environment. We also had the Swiss National Bank last week cut interest rates. So the dollar rose on Thursday after the Swiss National Bank surprise interest rate cut bolstered global risk sentiment and underscored the appeal of the greenback amid strong U.S. economic growth. So we saw outflow of the Swiss franc, inflow into risk assets, and inflow into dollar. Then at the same time that the Swiss National Bank cut interest rates, that Jerome Powell delivered a dovish sentiment, we also had the Bank of England keep its benchmark interest rates last week on hold as expected, and we also had a more dovish tone, where the Bank of England also said that the economy is moving in the direction for interest rate cuts, right? So, with all of that being said, we had a dovish tilt from Jerome Powell, i.e. the Federal Reserve, where the Swiss National Bank cut interest rates and deliver a dovish sentiment. We also had the Bank of England confirm that the economy's head in the right direction for interest rate cuts. So what did this do? This favored risk assets, or we saw the vast majority of risk assets across the board recover from their previous decline. Now, why is all this information important and why is it so readily overlooked? Number one, it's readily overlooked because a lot of people think that it's unimportant to pay attention to this information. And they think for some odd reason that risk assets as a whole are decoupling from traditional finance. That has yet to happen. Do I think it's going to happen in the future when real utility kicks in and these digital assets like XRP, HBAR, and other many utility-driven assets are actually used for their intrinsic utility and value that they actually bring to the real world? Absolutely. But right now, we need to be paying attention to these metrics so we can capitalize on discounted opportunities if they prevail. So now let's pay attention to what's going to potentially take place this week. I'll use Bitcoin and XRP as an example, just going over some potential outcomes that could happen and areas of interest that you all should be paying attention to. So what do we have on the data front this week as retail investors that we need to be paying attention to? If you head over to forexfactory.com, you go to this little icon right here, you click US dollar, You click these three folders and you hit apply filter. Okay. We scroll down here. You can see this tab right here controls this week. So you just go from 24th of March to the 30th of March, apply settings, and you can see all the US data economics that are set to come out this week, the fundamentals. Well, our key focus this week is going to be the tone from Federal Reserve speakers and the core PCE price index month over month and year over year, right? So let's first talk about why. Okay, let's go look at the Bitcoin charts just as an example, and I want to show you guys how, given the previous readings, here you can see the previous readings roughly from about October 2023 up until now, 2024, they have come out year over year with a slight decrease, slight decline in readings. And I want to show you guys how that has affected Bitcoin's price action. So roughly around the end of every single month, so roughly I believe it was November 29th that the data was released. And then I believe it was December 22nd, the data was released. You can just double check me if you feel that it's necessary. And then we had the data come out again at the end of January, which was here in this area. I believe it was the 29th or the 28th of January. And then we also had another data release via the core PCE price index year over year and month over month at the end of February, the last week of February, here in this area. So we can see how a decline in inflation since October of 2023, month over month and year over year, has had a positive implication in risk assets across the board, particularly looking at Bitcoin. We can see that month over month and year over year inflation coming out with a slight decrease, i.e., heading towards the Fed's goal of 2%, has had a positive impact on risk assets. So, with that being said, the ideal scenario this week to see a favorable risk on environment would be for us to see a continued or a further decline in core PCE price index year over year and month over month, which we know is the primary gauge. Look here. It is the Federal Reserve's primary inflationary measure, right? So ideal scenario to say a favorable risk on environment is we would want to see the core PCE price index month over month come out with a slight decline from previous readings. So you can see here, the previous reading is 0.4%. The forecasted reading is set to come out at 0.3%. So yes, the ideal scenario is being forecasted where we would want as risk asset investors to see an increase in our portfolio or increased risk asset demand. We would want the month over month reading to come out below 0.4%. Now, the year over year reading, you can see the previous reading that came out in February from January's inflationary readings came out at 2.8%. So the ideal scenario, let's just cover this, to see a continued risk on market sentiment. Let's type this out. We would want to see lower core PCE. I'm just going to put PI, price index, year over year and month over month come out lower than previous, feeding into the rate cut narrative and prompting further weakness in the dollar. Okay, and I'm going to turn this green because this would be a favorable scenario for risk assets. So if we got a scenario where we saw lower PCE price index year over year and month over month come out either lower than previous readings or with no elevated reading, then most likely we would see Bitcoin, i.e., looking at digital assets across the board, we would see Bitcoin hold this previous area of support and continue and make its way further to the upside, give or take some slight retracements. You can see here that every single time price has dipped in a discount, but the inflationary reading has come out lower than prior, the uptrend has continued. So to continue this momentum, given the fact that we're on the verge of the halvening, at the same time, coupled with lower inflationary readings, if we want to hold this previous area of interest, ideal scenario would be for us to see lower inflationary readings, Bitcoin consolidate at these levels, give or take some slight retracements, and for us to break higher on lower inflationary readings, right? This will be the ideal scenario. Now, the reason why I'm telling you guys to pay attention to this is because what happens if we see the inverse? That's what I want to talk about. The inverse scenario would be if we saw the opposite of this. higher core PCE price index year over year and month over month, showing signs of inflation still elevated and troublesome, coming further away or pushing further away from the Fed's mandate of bringing it down to 2%, right? So let's go the inverse. Let's type this out. What could potentially cause a sell-off in risk assets this week? Higher inflation readings, higher than previous core PCE year over year, month over month, strength in the dollar, weighing on rate cut narrative, and any hawkish tone from Fed speakers, because we do have Fed speakers sprinkled throughout the week, right? So I'll change this to red, okay? And in a scenario like this, right, where we get higher inflationary readings, higher core PCE price index year over year, month over month, strength in the dollar, weighing on risk assets, weighing on the rate cut narrative, and any hawkish comments from Fed speakers, then most likely scenario, especially if we get higher inflationary readings, I would not be surprised if Bitcoin corrects some of this previous bullish move from when we got lower inflationary readings back in January, right? I would not be surprised if we corrected this previous bullish move. So aiming for targets of roughly anywhere around 50 to 48,000 on Bitcoin. If we break those levels, so let me give you guys a perfect example of what I'm talking about. So the core PCE price index reading year over year that came out in February from January's inflationary readings came out at 2.8%. So what if, again, I'm not saying that this is going to happen, but what if the inflationary readings came out year over year, core PCE price index at 3.0%? That would put us all the way back at the inflationary readings where Bitcoin was at back in December, back here, right? So would it be unrealistic if this did happen, if the market corrected this entire previous bullish move? I don't think it would be. If we saw the metrics play out, higher inflationary readings. Now, I only think that this would take place if we saw higher inflationary readings right before the halving, right? Historically speaking, when the halving takes place, there's been a sell-off. So pay attention to that as well. But my point being is that this would still be healthy, right? If we are in a bull market cycle and we did see this type of major correction all the way back down to $42,000 to $48,000 for market makers to get a discounted price, looking at the previous bullish leg on the 8-hour on Bitcoin, right? Taking our fib from the low here, where inflationary readings back in January came out lower than previous, up to the high, we would only be coming in to about a 90% discount from where market makers previously bought from. So as long as we held above this area of interest and we started to consolidate, accumulate more orders, and then flip bullish again, this would still be healthy. The reason why I'm attempting to show you guys this is because regardless if we get this scenario or this scenario, you can be prepared for it mentally. Mentally, if the market does discount, again, I'm not saying that this is going to be confirmed, that this is going to happen, but is it really unreasonable to see it happen if we see higher inflationary readings and we see the market favor a risk-off market sentiment, strength back in the dollar due to higher inflation, right? I don't think it's an improbable scenario. It's something that we should all be paying attention to. So I thought that I'd bring it to light for you guys, okay? Now, my personal thesis is that we see lower PCE price index year over year and month over month come out, and we see a continued risk on sentiment. So looking at XRP's price action, let's just cover scenario number one, which will be the most ideal scenario, which will be the favorable scenario for risk assets. Lower core PCE price index year over year and month over month, a decline in the dollar, a favorable risk on market environment, and the narrative that the Federal Reserve is going to cut interest rates at some point in time in 2024 prevailing. As long as XRP price is above 58 cents, I'm going to remain bullish and I'm going to look for favorable buy scenarios. Reason being is you can see how during last month, when the core PCE price index year over year came out roughly here in this area, right, at the end of February, you can see how the market has reacted to this quote unquote demand region, and that comes in roughly at around 58 cents, where every single time the market is discounted into this area, we've, yes, give or take some price spikes to the downside, flipped bullish and held above this significant key psychological level. So, my ideal scenario for XRP this week on the higher time frame, give or take some slight retracements, would be for us to see lower core PCE price index year over year, for us to maybe see one more liquidity grab back to the downside underneath the 58 cents, to come back down into this previous demand range from these lows at roughly around 54 to 55 cents, but then for us to see lower core PCE price index, favorable risk on market environment, a break back above 58 cents, and for us to continue the bullish momentum to the upside. If we do see a bullish risk on environment and we do see favorable XRP prices above 58 cents, my first initial bullish targets will be the previous highs at roughly around 74 cents. Anything above 74 cents on XRP, I've been a firm believer that we're going to come back and we're going to target those highs from back in July when XRP pumped to the high 90-cent range when it was deemed a non-security. So anything above 75 cents for me on XRP, I will be targeting anywhere between 86 cents to $1.10. However, the most immediate bullish targets on XRP for me, if we can hold above the 58-cent threshold, are roughly around 75 cents. All right. So this would be the most favorable outcome for me, would be for us to see some further consolidation, some potential liquidity spikes to the downside to get a better discounted price from previous areas of interest, for us to break back above 58 cents, to remain bullish to the upside, and come and clear out these previous highs at roughly around 74 cents, right? Give or take. Now, the inverse scenario that I could see on XRP playing out will be obviously, of course, the drastic scenario in the inverse of a risk-on environment, risk-off environment driven by higher inflationary readings, stronger US dollar, weighing on risk sentiment, and pushing back the rate cut narrative that Jerome Powell delivered last Wednesday. In a scenario like this, if we do break 58 cents on XRP and we see a drastic sell-off in risk assets, the first initial area of interest that I will be targeting if we break below 58 cents and have a bearish close beneath will be the 50 to 48 cent psychological level range. So that would look something like this. Ideal scenario, again, risk off market environment, weighing on risk assets, higher inflationary readings, stronger US dollar, a break and close on the higher time frame below 58 cents, and I'd be targeting anywhere between 50 to 48 cents as my immediate target to look for better buy positions. If at any time we break 48 cents, let's go out to the higher time frame on XRP, okay? I've been paying attention to, and so has individuals in our private community been paying attention to this massive trend line liquidity that exists on the higher time frame, i.e. the daily and above on XRP. Okay, you can see here from all the way roughly about July 2022, we've been building this massive trend line liquidity where everybody consistently thinks that XRP is going to hold above this significant psychological level. Well, interestingly enough, if we did pull back to this quote unquote trend line at roughly around 50 to 48 cents, and we did break that, and we did happen to see XRP price below 48 cents, I'm just giving you guys these bearish targets in advance just in case, I would be targeting anywhere between 38 to 32 cents on XRP. So, worst case scenario, first bearish targets on XRP if we break 58 cents are going to be anywhere between 50 to 48 cents for me personally. Anything below 48 cents, I will calmly sit on my hands and wait to see if we can see any further discounted prices at anywhere between 38 to 32 cents before I decide to take action on XRP. I don't think that that's going to happen, but I'm ready in case it does, and so should anybody else that takes a forward-looking reactive approach to these markets. The most favorable scenario again this week would be for us to hold sustainable above 58 cents, give or take some slight retracements for better discounted positions down into the low 50s, for us to see a favorable risk on market environment, and for us to see lower inflationary readings weighing on the dollar and prompting a favorable risk on market mood, and for us to see higher prices on XRP. Many blessings to you guys. Again, this is why it's imperative that you all pay attention to this information from an intraday, monthly, daily, weekly perspective, right? If you guys want further insights via technical analysis breakdowns that we give to our private community. Make sure that you guys visit CYPRXtrading.com. We'd love to have you on the team. As always, many blessings to you all. Be cognizant, be aware out there, and I'll see you guys in the next video breakdown.